Hello, everyone. Okay, we are starting our workshop today. So proud to have Bob and Annie here from Guarantee Mortgage for this informative workshop. We will be talking about mortgage assistance and market updates from now to 2:30. Anyone have any questions? Please type it on the chat room. We will answer by its order. So let's get started. Thank you, Bob. Welcome.
Thank you. Thank you so much for inviting us. We're excited to be here. Not much excitement working from home as much anymore. We're not going into the office. Just to give you some background about who we are and what we do and how long we've been doing this before I go into it. My name is Bob Siefert. I've been with Guarantee Mortgage since 1991. Guarantee Mortgage has been a premier Bay Area lender since 1986. So as we talk to you and so forth, hopefully you'll be able to gain a lot of information since we've been doing this for a long time. One thing I will never say again is I think I've seen every market, because every time I do, something blows up like now. And we're faced with a whole new set of circumstances. So, but things are good. So I just wanted to go do a little bit of an overview on what's going on with the market, and then maybe talk about what some of our investors are doing, what we're seeing with our competitors, and then maybe go into the whole forbearance thing if people have questions about that. So just the overall state of residential lending, boy, everything has kind of been thrown upside down the last 45 days. In the beginning of March, when the Fed dropped rates to near zero, of course, mortgage rates followed suit. And we got very busy. In our group, for example, and we do about $1 billion a year, we originated enough loans in 1 week to cover what we would typically do in 3 months. And that was just us. If you look at that times every other lender out there doing the same type of volume, we completely flooded the system. And in flooding the system, we started to see people actually start to raise rates as opposed to lower them because of the sheer amount of volume that they were getting. In addition to that, and rates were good, we got a lot of great people locked, but not everybody was able to make it because rates started creeping up. Also, in addition to that, with the uncertainty in the marketplace, i.e. A lot of people getting laid off. Obviously, we've seen about 9 million people laid off nationwide so far. A lot of people now asking for forbearance on their loan, where they don't have to make their payment for a few months, and I'll talk a little bit about that later. It made the market very uncertain, and markets hate uncertainty. So the fact that there was a lot of concern over whether or not these mortgage-backed securities, which is what they get sold to investors as, had any value. So with that going away, we saw a lot of investors start to pull out of the market. Chase is still in, but several of our big people like Wells have pulled out of the market and put a lot of restrictions around it. A lot of our other investors that you wouldn't necessarily know because they don't do retail, they do it through us as a mortgage bank, pulled out, and we started seeing a lot of product, particularly jumbo product, go away. And jumbo product being loans over 729. I think I got the wrong number. What was it?
5.
Yeah, so anything over that loan amount, and of course the Bay Area is a big jumbo market, we started seeing those investors pull out. So that market kind of tightened up a little bit. In addition, there's a lot of product out there that doesn't fit your typical mold as it relates to verification of employment and paycheck stubs and W-2s, so forth. Those are called non-QM products. Those are the products that qualify you off of bank statements and so forth, and come up with your income and alternative methods. The market for that completely dried up, and those lenders completely pulled out of the market. It was very tough because we had a lot of people in refinance or purchase situations that we now had to scramble to find homes for. And we did for 99% of them, which was great. But that whole non-QM market is completely gone right now. Like I said, mortgage rates just in general have creeped up because of the lack of investors and uncertainty in the marketplace. And it's caused a little bit of a problem with residential lending. That being said, that's kind of all the bad stuff. Let's talk about the good stuff. We do have an enormous amount of volume that we're still working on for the loans we were able to lock and the purchases we have going on. And we are getting those done. There's been some changes of that whole process because there have been people who have been laid off, unfortunately, or are self-employed and don't necessarily have the income that they had when we qualified them. And there's all kind of processes put in place from our lenders on that front now. That being, we have to verify employment again before we close the loan. We have to do an analysis of the business to make sure that the business is self-viable in the shelter in place, which a lot of people are very intuitive and figured out ways to make their businesses work. But there's an extra step in making sure that they can still do business and be viable. So there's extra layers on there to make sure that we can get these loans done. In addition, we have to verify people's assets again right before we close, because obviously the stock market had its issues and some people lost value. So we are closing loans. It's just a very different process than before the whole pandemic started. But I am happy to say we're closing a lot of business. I think as you see some of this go through the pipeline and we start to see all this unwind as it relates to the enormous amount of volume that's still sitting there, I think you'll see lenders start to come back. We've already started to see some of that. Conforming rates, which are loan amounts up to $510,000, have definitely come back. Those rates are pretty much where we were back in the beginning of March, so that's great. High balance, which are loans between 510 and 765, those are coming back much slower, simply because Fannie Mae and Freddie Mac feels there's still a little bit of high risk there, but we are starting to see improvements in that daily. We're even starting to hear some non-QM lenders, those are the loans that are out of the box, lenders that are using paycheck, bank statements and so forth to get people qualified. We were starting to hear them come back, obviously at much lower loan to values, but we are seeing them come back as well. So I don't know if we've turned the corner yet. We're starting to see some signs of the market adjusting to our new reality. Obviously, as we pull out of this more and out of the pandemic and people start going back to work and we start getting back to our new normal, I think we'll continue to see the market open up. And in particular, the one thing I also want to make sure everybody knows is that the foreseeable future, all expectations are rates will stay incredibly low. So if you miss the opportunity to refinance or purchase when rates were at their all-time low, I don't think you should give up hope. I think they're going to be back as soon as we start clearing out the system of all these backlog of loans and the market starts returning back to normal. I talked a lot. Is there any questions so far?
Hey, Bob, I have a question. Mortgage forbearance versus mortgage deferment. Have you seen any lenders willing to do deferment and basically add on these however many months on the back end on the amortization, extending out the amortization? Have you come across any of that happening with certain lenders or not?
Yes, I think every lender is on board with doing that. They're all doing it a little bit differently. When this whole process came out about deferment so that people who have lost their jobs or have a slowdown in income won't have to make their payments for the next few months and it would get added to the loan, there was not a whole lot of guidelines on A, who could qualify for that, and B, how it would work. So we've seen people that don't necessarily have to do it that have jobs going and getting the deferments as well. That's put a lot of pressure on the market because even though people aren't making those payments, the lender have to make those payments to their investors. And that's part of the reason why you see so much uncertainty in the market. How much deferment is there going to be? How long is it going to last? But each lender is different. Some of them are taking, let's say if you defer 3 months and making you pay a lump sum in the fourth. I don't know how that really helps anybody. Some of them are adding it to the back of the loan and extending loan out. And some of them are having people make partial payments on the back, the stuff that's been deferred to the lender. What I would tell people to do is, because it is at the lender's discretion, is to talk to your lender, make sure you find out not only will they defer it, and we haven't heard anybody be denied yet, by the way, not only will they defer it, but how does that repayment look? That's really important. Because if you're going to defer, you want to know what situation you're getting yourself into.
Hi everyone, this is Pov. I am also with Guarantee Mortgage, working with Bob and Annie as business development specialists. To answer your question as well, just to add on what Bob said, Bob is absolutely right. But I've also seen a written forbearance approval letter from a client, and the letter actually specified 4 repayment options. And to your point, they gave all 4 options to the client to choose from. One was either to pay the lump sum of whatever back due payment was. The other one was to tag it to the tail end of the loan term. and the other one was to re-amortize it. So lenders do give that options, but like Bob said, it varies from lender to lender. So I would really, like Bob said, recommend your client to talk to their servicer.
Yeah, one of the other things I'm a little worried about, and I hope this doesn't happen because this is not the intent of the rule, is that how the lenders are going to report that on the credit. They've been mandated to not show people as late. So your credit score shouldn't be affected. How your rating shows on your mortgage, on your credit report shouldn't be affected. But what I don't know is going to happen is whether or not lenders are going to look at that deferment as though being modified and put restrictions around whether people can refinance their purchase after that. I hope that's not true, but we still have no clear direction on that.
And Bob, I think you just answered some of the chat questions there, whether it's considered a modification and how is it reported to credit bureaus.
Yeah, we don't have the answer for that yet. It shouldn't be reported as a modification. That's not the spirit of the intent of the rule. The whole rule was put in place so people's credit wouldn't be affected, but we don't know that yet because it's all brand new.
And what we do know though, if you or your clients are wanting to ask for forbearance, make sure that they're not trying to refinance their loan because they will not qualify for a refi while in forbearance.
Right. Right. So, I mean, again, not knowing or having some uncertainty about what the effect that has on people's future refinance options or purchase options. If you don't need to defer your payment, I would look at it real hard and decide whether or not that's something you want to do, particularly if you want to refinance soon or if you want to purchase. Hopefully that won't be the case and nobody will have restrictions, but that is one thing we're concerned about. The market overall going forward, I think, is very positive. We are seeing a lot of people go into contract even with all this stuff going on. We're seeing a lot of people continue to put in their applications to refinance, so they're in line when the market starts to open up a little bit. Every indication that we've had from every lender that we've dealt with, and certainly from the feds, is that rates will continue to stay low. Because it's going to take some time for this all to unwind, even if they flip the switch tomorrow and tell everybody they can go back to work. It's going to take a while for people to feel comfortable, where they spend their money, and also to be able to feel confident that they're back to work and everything is in good shape. But the long-term perception for rates as well as values of homes are very good, very, very good. So if anything, this may be building up some more pent-up demand for when this does ease for the purchase market. Did I miss anything, Pov, that you thought I should touch on? I'll go back and hit up some of this stuff.
No, you covered most of everything, but I do just want to elaborate a little bit on what non-QM means. We have a lot of realtors on the call, but we also have some consumers as well who may not understand what non-QM means. So as many of you know, a lot of realtors, they love using us for non-traditional lending and borrowers who cannot qualify with the traditional banks like Wells Fargo, Chase, borrowers who need to do like stated income, bank statement program, non-warrantable condo, and the list goes on. We can get very, very creative. And what Bob mentioned was that a lot of these non-QMs have been suspended. It doesn't mean that it has gone away. It's just been temporarily suspended for the unforeseen future. So in the meantime, realtors, I would really recommend you, because you're their first stop before they come to us for pre-approval. I would really counsel them, on their lending options. And to piggyback on what Bob said about re-verifying income and assets, again, realtors, is very, very important for you to stay in touch with your client about their employment, about any changes with their assets, because a lot of clients are getting hit with the stock market. So if they needed their stocks for reserves and they got hit with that, then they may not qualify anymore. So it's really important that both us loan officers and the realtors work as a team and communicate with your client to make sure that we take them all the way to funding.
Yeah, very much so. And, one of the things that a company like Guarantee Mortgage does benefit from, as Pov alluded to, is that we not only represent Fannie Mae and Freddie Freddie Mac, and all the best rates out there as it relates to conforming markets. But in jumbo markets, we also represent all the other huge investors out there and the people you see on the corner as Wells, Chase, and so on, so that we can have access to all of those. The non-QM stuff, the alternative type of documentation to be able to have you qualify, has become a huge part of our market as well. And I don't see that not continuing in the future, even though investors have pulled out for right now. I think Pov's right. I think it will continue to come back. We're already starting to see people come back at lower loan to values, i.e. lower loan amounts to the appraised value, so they have some protection there. But the fact that we are starting to see people come back so quick is a really positive thing for the market.
Right.
What else can we share with you? Appraisals. Let's talk about appraisals. We didn't talk about that. That of course has taken on a whole new life of its own too. As you know, with the shelter-in-place orders, appraisers typically would come out, inspect your property, do a tour of the property, and do their measurements and ask you your questions and leave. With the shelter-in-place going on and to make sure that everybody's health is protected, there's been new guidelines along that as well. So on certain loan situations, loans under 80%, for example, we are getting exceptions and waivers from our lenders to allow the appraiser to do a desktop review, which means they don't necessarily have to go into the home. So we're not holding up the appraisal process. If there's concerns at all from the seller or the person that's refinancing, that they don't want to have contact from the outside, or somebody in the home happens to not be feeling well, they've set up parameters to be able to go ahead and do appraisal still, so that we're not sitting there backlogged on that. And that is, that's been a big pickup too, that we can still get value and protect everybody's health. And I think the appraisal turn times have gone up a little bit just because it is a new situation now, but we're still able to get those and close them. What else can I tell you?
Bob and Pov, have you seen any instances of low appraisals, especially at high LTV loans? Have you experienced any appraisals coming in less than?
I have not seen a drop off in value yet. And I don't know that we will if this is just in the short term. I mean, obviously, if this were to run for a long period of time, then it probably would have a bigger effect on values. We have not seen that in our appraised values yet. I don't know if you have, Pov, or if you've run into that at all, or Annie, but I have not.
I haven't either, but it's a little bit too early for the March and April market and sales data to reflect on comparable sales. Because with appraisal comparable sales, we go back as far as 6 months. So it might start hitting in June or July, but right now we haven't seen that yet. And Bob,
once the restrictions get released, obviously they'll be going back to normal as it relates to, oh, I'm sorry, did I cut somebody off?
Oh, I was gonna say, someone has a question for you. Are we doing drive-by appraisal for 2-unit building? Did you catch that, Bob? Hello?
Drive-bys for 2-unit buildings is not on the list to do drive-bys for. I'm sorry, I think I spoke over you. I apologize. There should be a lag. But I think on multi-units, we still have to have a full appraisal. But I will tell you that obviously you'd have to get approval from the tenants to be able to go in and have them inspect. But typically what the appraiser asks for is that the borrower leave all the lights on, the client leave all the lights on in the home, leave the doors open so they can go through, do their inspection, not have to touch anything, and then to be able to get out. They don't wear gloves. I mean, they don't wear gloves. They wear gloves and they wear a mask. And so there's a lot of safety precautions built around that. The guidelines I've seen so far, if anything other than a single family or a condo, and if it's over 85% loan to value, then the appraiser needs to do a physical inspection. What else?
Any other questions that anybody have?
Hey, it's Janice. So
Janice.
I wanted to see what kind of loan rates typically for a good, I guess high scoring credit score are you guys seeing nowadays with the changes in the non-QM market and with Fannie Mae guidelines? I know it went down really low and now it's gone up a lot. So what are you guys seeing on the owner occupied and the investment rates? What are you guys seeing? Thanks.
Well, it's pretty much broken up into loan amounts. So conforming loan amounts, for example, are loan amounts under 510. That pricing is pretty much back where it was when rates had dropped so low at the beginning of March. That is whether it's single family or non-owner occupied or condos or units or whatever. That pricing seems to have come back pretty strong. Rates in the next group of loans classification, which is over 510 all the way up to 765, have gone up considerably. That market has not come back yet. And we don't know the timing on that. Fannie Mae and Freddie Mac, who are the major purchasers of these loans, put huge overlays or risk overlays on their pricing. And so that jumped up the pricing for everybody. And until we see those overlays start to come back and fall away, which we have already started to see, but not to any great extent, rates will be artificially high on those programs. On jumbo, we are starting to see those rates come back a little bit too, but again, because of the sheer amount of volume that was going through 45 days ago, typically lenders, when they want to shut off the valve because they're getting too busy, will just raise their rates anyway, just to slow down production. So some of that was going on before this even happened with COVID, but after the uncertainty around COVID, then they moved their rates even higher. So jumbo market is priced higher than it should be right now. But again, we think we'll see that come back. Same for the non-QM. The non-QM right now, which is the out of the box type of lending, where we're looking at bank statements and so forth, that is just now starting to come back, and it's starting to come back at lower loan to values. I don't think the rates have changed much on those from whatever you're used to. It's just that the loan to values on those have dropped.
Bob, what's the, do you know what the differential is between owner occupied and non-owner occupied rate? What would typically there?
I know what it is in fee. Oh, do you know how that translates to rate necessarily?
Yeah, yes.
Yeah, I'm seeing almost a whole point in rate. There's one that I compared recently, and it was a 3/4 difference in rate. So investment property pricing is very high right now, and a lot of investors and banks have suspended investment lending, especially multi-units. Although we are still doing it through some of our channels, but just be mindful of that when your clients are buying investment property as well.
Yeah, and especially on the jumbo side, the non-owner jumbo product seems to have really dried up a bit. Although we do have a few lenders that do them. The concern always is when you're losing the majority of your lenders doing product and you have one or two still out there, is what happens if for some reason the lender decides not to buy the loan, then you're stuck with it. So a lot of times there's some hesitancy to do those loans just simply because there's not a whole lot of avenues to sell those. But again, I know it sounds all like doom and gloom, and I certainly don't mean it to be that way, because considering the magnitude of what's going on right now, the fact that we are still lending, I think is a very good thing. The fact that we haven't seen huge adjustments in value so far, I think is a really good thing. We still are seeing purchases go into contract. Obviously, the longer this would be to be delayed, then obviously, as Pov said, we'll see bigger effects on the market down the road. But all the indications that we're getting is that people want to lend, they want to get back in the market, and there's just a lot of pent-up demand once this is all over.
And Carolyn, just to further add to your question, we are still seeing, we're still lending with pretty good competitive rates with higher down payment. But what we used to see a lot in the past was like lower down payment, 10% down or 20% down on investment property. Those we don't see much anymore. They don't exist much anymore. But if it's still a standard high down payment, excellent credit score, excellent reserves, those loans are still in existence and rates are still okay. They're not too bad.
Yeah. And to that extent on jumbo, we still have ability to do 80, 10, and 10, where borrowers putting down 10%. We do an 80% first. as well as a 10% second to get them that best rate on the first. We are still doing those. And we are still doing straight 90s on jumbos. They're coming back. We're just getting a new investor that's coming to the market that wants that product. So yeah, I think the best thing as Pov stated earlier to do as a realtor or as a potential borrower or purchaser is to make sure you stay in touch with your loan officer and vice versa. It's incumbent on us to make sure you guys are up to date on what's going on. And I can tell you at Guarantee Mortgage, we do a really good job of sharing information. I think these guys are probably on overload from all the information we share. But things are changing every day. And so that's why it's really important that we stay in contact with you and keep you updated as the changes come in.
There are some chat questions. Are we still seeing HELOCs? Yes, we are still. I can't speak on other investors or lenders, but we are still doing HELOCs. And are we still seeing cash out? I don't know if other lenders are doing it, but we are still doing cash out.
Yeah, there's obviously a premium on those, but we can do cash out still. Yeah. And typically the way pricing works is investors, when they're looking at lending, price out depending on risk, right? So if you're doing a 20% down purchase or you're doing a refinance for 80% or less, they look at those as at least risk loans and you get the best pricing on those. Anytime you start putting maybe a little bit less cash down on a purchase or you're taking cash out on a refinance, they look at those as other levels of risk. And so those rates go up a little bit on those loans.
There's a question that asks, are we seeing appraised value come in at list or below list? I think Bob just answered this question earlier, but no, we haven't been seeing appraised value come in lower than list, or we haven't seen that yet. It hasn't, like I said, the March sales and April sales hasn't reflected in the comparable sales within the 6 months that appraisers use yet, but who knows what it will show in June or July.
We have really close relationships with our appraisers, nationwide for that matter, and they do a really good job of keeping us up to date on what's going on. The only reason you would see values drop, I would think, is if we start seeing the number of sales really dropped off, and then there's hard to find comparable sales in a certain neighborhood, or if those recent sales do start going down in value, that's when you'll see it start changing on new evaluations. But we have not seen that yet, and hopefully we won't.
Someone just asked, are we seeing stated income, Bob?
No, but again, that would fall into the non-QM bucket. That's the stuff that's the non-traditional type of financing. We had a pretty good extensive list of people that were doing stated before all this happens, and my expectations are they will be back as investors start feeling more comfortable with the market. But as of right now, no.
Yeah, we did get words from some of our investors who used to do saying that they are looking, they are anticipating to come back, but it's suspended temporary right now.
What's our typical close time? We're still closing purchases really quickly. So, 21 days. I mean, I think has kind of been the standard for San Francisco Bay Area. We can close them quicker if we need to. Obviously, that would depend on how fast we get all the information together. But purchases are still happening on time. Refinances are running about 45 days, I would say now. Loans that we haven't processed, and we are originating a lot of loans, like I said, still, particularly in the under 510 loan amount, but even increasingly so with some of our jumbos. Can you get a HELOC on an investment property? I'm a little rusty on that one. Do you know, Pov or Annie?
Yeah, we have two investors that do HELOCs on investment properties. However, we have to assess it case by case to see what the loan to value down payment requirements are.
I think I skipped over a question. Go ahead.
Yeah, they may have tightened up the guidelines on those.
I think I skipped over a question. What's your typical time frame on appraisals? Appraisals on purchases are getting turned in a week, I would say. We have the ability to request rushes on those, which we typically do on purchases. I would say a week to 10 days, unless Pov corrects me, but what I've been seeing is a week to 10 days. On refinances, you're looking at about 2 to 3 weeks.
You're right. So another question from Wendy: if borrower wants to refinance, should they start the loan application now or advise them to wait? I would talk to their loan officer, whether it's a GM loan officer or somebody, to assess, their specific scenario. Sometimes they might need to wait. Sometimes they might need to lock now. So the loan officer needs to assess their specific scenario on a case by case.
Yeah, particularly, well, it doesn't matter if you're self-employed or you actually have a job and a W-2 person. The lenders right now are really scrutinizing those to make sure that people are still employed, are still making the same amount of income, are still generating the same amount of income or close to it on their self-employment. So again, as loan officers, that's one of the first things we look at when we're talking to our clients. We need to be able to make sure that we can justify that and presenting that loan for approval. And there's various ways to do that, and we've got a lot of them done. People have been very ingenious on how they continue to generate income on self-employment, and it's just a matter of working with them to make sure we present the accurate picture.
Right. And it also depends too. Is it rate and term refinance to lower the rate? Are we able to achieve that rate that they want at the moment? If not, then they may need to float. Or are they anticipating to lose their job soon? If they know the exact time frame, if they're going to get laid off or get furloughed, then they may want to refinance before that happens, because if that does happen, then they won't qualify anymore.
I think part of the question also too was, should we apply now even though the rate not be there for myself, or I'm not quite ready to buy yet, but I want to apply now? Yes, I would apply. I would talk to your loan officer, walk through your individual situation to make sure that we've got everything documented and tightened up to best represent you. But I would not wait, because what will happen when rates do come back is we're going to get flooded again. And I would think if you want to get the best rates out there, you would want to get your application in with your loan officer and make sure that it's fully documented to the extent that you can, and be ready to go.
I agree. With purchases, always apply now.
We had another question here. Are we seeing any credit issues with people in forbearance for loans for 3 months? That jury's still out on that yet, because this is a new occurrence. We do know that they're happening as far as doing the forbearance. Lenders seem very willing to go ahead and make sure that that happens for their clients. Please make sure that you find out from your individual lender or loan servicer what the terms of that are. I did not know until Pov just told me that we're getting 3 or 4 different options from some of our lenders on how you want to pay it back, which is great. But you need to make sure that you know what you're getting yourself into when you ask for that forbearance with your lender. So far, like I said, we have not seen that adversely affect anybody's credit. Given the spirit of the legislation, it's not supposed to affect their credit. But at the same time, I know when we had the mortgage meltdown in 2008, for example, when people were getting loan modifications, it did limit their ability to purchase or refinance for a period of time. I don't know if that's going to happen this time. It's not supposed to, but we haven't had any actual live experience with that yet because it's so brand new.
Yeah, it's too early. Another question, if someone just refinance somewhere else, can they refi with you right away, or do they have to wait?
This is a tough question because what you don't see goes on behind the scenes is that anytime we close a loan and sell it to an investor, it doesn't matter if it's a wholesale investor where we're brokering out or if we're banking the loan and keeping it internally. Typically, that investor wants to see the loan stay on the books for at least 6 months. If it doesn't stay on the loan for 6 months, then we get hit with, it's called an EPO, which is an early payoff. Doesn't affect you guys, doesn't affect your loan, but we do get penalized on our side. So we do try to make sure that people stay in that loan for at least 6 months. If they can't, or if rates have dropped so much that they don't want to wait, then we do work it out with them and we make it happen. But if you refinance with somebody before, again, typically it's 6 months, but you can do whatever you want to do. If you want to refinance it, we'll work it out with you to make it work.
what we're also seeing that a lot of people don't know is that if your client or if you refinance, if you did a cash out refinance less than 6 months ago, rates dropped dramatically a couple months ago and you're trying to do a written term refinance, you will get hit as a cash out before the 6 months waiting period. So if you did a cash out refinance within 6 months ago, trying to do a written term now, it would be considered a cash out. You would get the cash out rate. And the difference between a cash out rate and a written term rate is significant. So that's something that you should consider.
Yeah, and that's something that we would identify for you up front when we're going through the loan process. But yeah, some of our lenders require that you be in the property 6 months or a year after you did cash out to do a rate and term, and that's something we'd have to check. I asked, do you see the income reduced for full-time to on-call? Do you see the income reduced for full-time to on-call with furlough letter? If I'm reading this correctly, I don't think you have to give any reason to ask for a forbearance. You can just call up and say, I want to have a forbearance. I don't think as of right now, there's any restrictions on documenting that. Obviously, if we were doing a purchase or a refinance for you and you got furloughed, then we would have to not use that income for right now. So if there was a co-borrower, we would just have to go with their income or again, revisit it once you went back to work.
Great. So Bob, I think we're out of time for the English.
Annie, I think they're getting restless for you to talk.
Yes. So we're gonna have Annie.
I'm gonna stay on here. I was just gonna say, I'll stay on here, Annie, if you have any questions of me.
Sure.
Okay.
If you still have
Just
any
that I'll be
questions,
here.
you can type the chat box. We will be starting the Chinese sessions with Annie Ouyang from Guarantee Mortgage right now. Welcome, Annie.
大家好，我個名叫 Annie 歐陽，我係 Guarantee Mortgage 嘅資深貸款專員。咁我今日想同大家講下咧，就係關於房屋嘅貸款付款協助同埋關於個市場嘅更新狀況。咁基本上你哋如果係有聽到英文版嗰個咧，我基本上係翻譯翻頭先我阿 Bob 即係我經理佢講嘅嘢。咁睇下你哋有冇其他問題咁樣？首先，我哋 Guarantee Mortgage 咧就係1986年開始已經喺三藩市度成立㗎啦。咁三藩市本地咧基本上都幾有名嘅。咁但係因為我哋冇市面嗰啲分行，所以好多人都未必知道我哋嘅存在。一般客人，但係好多啲經紀都知道嘅。咁我自己咧就做咗15年㗎啦，咁所以都就可以話都好清楚成個貸款嘅程序啊，各方面需要啲咩文件啊咁樣嗰啲嘢嘅。咁想講一講因為呢個新冠肺炎嘅疫情影響咧，而家個住宅貸款市場同45日之前嘅分別咧，係完全係一個事情360度反轉咗㗎啦，成個市場因為大家都好擔心個疫情會發展成點樣，有好多人又唔知道佢哋會唔會冇工做啊，或者係會唔會俾公司即係裁員啊，又或者就算佢哋冇俾人裁員或者係冇工做咁樣，佢哋自己都會擔心，唔敢咁花費咁多嘢字。咁另外咧就係講到呢個啲利率貸款利率係冇，就算嗰個聯邦佢哋減到去0%，咁但係貸款利率咧暫時都冇話唔會話去到低到去0啊，或者3% 以下咁樣。個原因就係咧，因為3月初嗰陣時，各銀行即係唔係淨係我哋所有嘅銀行咧都因為利率低咗好多，咁所以就好多人去鎖咗個 rate 啊，買屋想重貸，咁變咗銀行就非常之忙。咁我哋公司咧1個禮拜內已經收到平時3個月要做嘅生意啦，咁所以好明顯所有步驟都會受影響，因為會 人手嗰邊可能冇咁唔夠，唔係好夠啦。咁另外就係即係大家都需要啲時間去消化下呢啲貸款嘅。咁跟住落嚟咧，就係講話另外點解啲利率會高咗咧？因為雖然嗰個聯邦利率都係好低，但因為咧主要係因為好多啲投資者暫時都唔想買我哋呢啲貸款，咁變咗好多人即係供應嘅需求啦。如果冇人買，咁當然個價錢會高啲。咁但係呢個應該都係暫時性嘅啫，因為即係等個市場佢哋消化咗，而家嗰啲申請表格之後咧，咁啊慢慢佢哋就會降翻啲息落嚟㗎啦。咁另外就係佢哋即係希望好似琴日新聞都有講話，有可能研發到嗰個藥可以控制個疫情，咁啲投資者又會比較放心啲，又去慢慢開始逐步放鬆翻啲，因為佢哋覺得個經濟會稍為有啲希望咁啦。咁至於嗰個有好多人可能會問唔查收入嘅貸款而家係點樣情況？咁基本上好多銀行好多啲投資者咧，佢哋暫時都係擱置咗呢個 program 嘅呢個計劃嘅，因為佢哋都擔心一嚟呢啲風險通常都比較大啦，二嚟就係佢哋都想留翻住啲錢睇下點樣去再分配，睇下個市場反應點樣先再繼續。咁如果而家講到咧，就講如果你嗰個申請貸款已經做緊嘅話咧，咁我哋有啲咩新嘅條例？咁主要就係要重新再核證你係仲做緊嘢，同埋你銀行嘅存款啊，或者係你股票戶口嗰啲錢都仲喺度，即係仲夠嘅，仲足夠嘅。大家好明白嘅原因就係因為會擔心你會唔會忽然間冇咗份工，或者係你股票市場嗰度啲錢會因為股票市場而家跌咗好多，咁可能驚你啲錢亦都唔夠。咁所以就希望大家都要注意下。如果你哋真係咁唔好彩，譬如冇咗份工，或者係即係需要股票啲錢去買屋啊咁樣嘅話咧，最好就同你哋嘅貸款專員啊，或者你嘅經紀講你哋嘅情況。咁越早知道就越易去同銀行或者係對方賣家咁樣溝通，咁就希望將個影響減到最低。跟住落嚟咧，佢又提到Bob 又提到講嗰個付款協助計劃嘅程序啊，點解咁樣做啊，同埋有啲咩後果。咁一般嚟講咧，如果你哋即通常一般係俾嗰啲可能交唔起房貸嘅人去做啦。但係如果你哋你想的話，係都可以去申請嘅，因為佢基本上冇乜條件限制話你點樣先至可以申請。但係咧就有可能會影響到你日後買屋或者重貸嘅機會啊，或者係個條件咁樣。之後至於每間銀行即係你哋自己嗰個貸款咧，係會你需要同你哋嗰間銀行溝通，打電話去問佢，或者 email 問佢究竟係點嘅情況。如果你真係需要呢個協助的話，佢哋有可能咧會叫你，即係佢可以暫時俾3個月，你唔使俾字啦。咁但係咧之後佢可能要你一次過第4個月即刻俾翻晒所有頭嗰3個月冇俾到嗰啲錢，或者係佢會將佢加咗落去你個貸款額度，等到最尾嗰陣時再問你收，或者係延長你個貸款期限，甚至係或者佢可能可以幫你重新再計過嗰個每個月嘅 payment， 咁就等你可以即係唔需要一次過俾一筆錢出嚟都得嘅。咁睇下每間銀行自己有自己嘅規則，所以你都係最好 call 一 call 去問有啲咩可以幫到你哋。仲有就係
咁如果係你哋嘅銀行咧，你間銀行咧 Annie， 咁如果去到第4個月俾唔起咁點？俾唔翻咁點？即係還唔到過去3個月，因為每一個月都可能好多啊嘛，可能係3000咁樣。咁3個月之後咧就會萬幾，連第4個月咧就可能係15000咁樣。咁到時可能我只係有1萬蚊俾，或者唔夠錢俾，咁點算嘅？通常會有咩事發生啊？如果要你估計。
嗱，首先我哋銀行咧就唔做即係呢個叫 servicing， 我哋就唔係幫啲銀行去收呢啲每月供嗰啲錢嘅，咁所以就基本上唔關我哋事呢一 part。咁但係咧，我哋就估計如果你即係有咁嘅需要的話，你去同翻你間銀行傾，睇下佢哋有咩可以做到咁樣。即係好似頭先我同事 Pov 都講到話，佢收到有個客人有封信寫話佢有4個唔同嘅選項可以俾佢揀，想點樣還翻嗰筆錢嘅。咁我相信銀行都即係大家都知道嘅情況，而家個個都好艱辛。咁我諗佢哋都會即係比較酌情啲處理嘅，即係佢都唔想直情即係要拍埋你間屋噶嘛。其實佢哋都即係要拍埋屋嘅話，其實都好麻煩嘅手續上，要盡量佢哋都唔會想做嘅。咁之後咧，Bob 就講到話做嗰個估價報告有冇啲咩影響？咁主要咧嘅時間係需要長咗嘅，因為點解咧？一嚟冇咁多估價師肯去做啦，因為佢哋即係自己都有啲人都會擔心噶嘛。咁二嚟咧就係咁冇咁多人做，咁當然佢哋接到 order 嘅話就會需要多啲時間先搞得掂啦。跟住咧，就係另外就係因為有可能，譬如嗰個估價師已經準備好晒要去做，咁點知忽然間佢可能突然間唔舒服啊，或者嗰個住客或者係總之佢哋其他一個人有唔舒服咁樣，你都唔敢俾嗰個人入屋啦，係咪？咁所以通常暫時佢哋亦都唔會俾我哋去延期。唔係，雖然唔係延期，係即係提早啊，想趕快做到嗰個報告出嚟。因為我自己試過有個客人，佢做要等驗屋咧，都等咗差唔多1個禮拜到，嗰個估價師先得閒。跟住仲之後驗完屋，仲要2個禮拜先收到個報告。咁所以即係我哋都冇辦法，因為佢可能真係太忙啦。咁基本上冇時間去做，咁只可以等。咁但係如果真係有咁嘅情況出現嘅話咧，如果啲重貸的話，我哋絕對會幫你免費去延長嗰個利率嘅。如果鎖咗的話，咁另外咧就講到嗰個市場嘅狀況，或者係之後我哋覺得我哋有咩睇法，將來咁我哋都幾樂觀嘅，其實對呢個市場，因為我哋都仲見到好多人都買到屋啦，亦都有好多人準備去重貸，雖然暫時啲利率都仲係高過3月初個時間，咁但係其實好多人都已經送咗啲申請表啊、啲文件入嚟，咁準備好晒，咁就而家就係一切就等個利率翻嚟咁嘅啫。咁Bob 都有提到話，如果細窿嘅話咧，即係51萬以下嗰啲利息咧，其實而家都已經係接近之前嗰個水平噶啦。咁所以如果你哋係想做嘅話，可以去同你哋嘅貸款專員傾傾。而家適唔適合？就算唔適合，你真係想做的話，我覺得都可以先送咗份申請表入去，咁叫佢幫你留意下個市場。咁一見到個利率好嘅話，就即刻幫你鎖咗佢咯。因為而家鎖窿咧，好多時佢要你一定有晒嗰啲即係申請表一定要有啦，文件要有啦。咁有啲銀行仲可能要有埋個估價報告先做得嘅。我哋亦都覺得嗰個即係聯儲局亦都有講啦，個利息暫時都唔會點樣升噶啦。咁所以大家如果錯過咗上一個wave 冇鎖到嗰啲貸款嘅話咧，咁都唔使擔心嘅。而家應該都仲可以有機會做到嘅。 應該大致上，另外就係嗰啲non-QM，即係嗰啲唔查收入啊、非質量或者係非正式合資格嘅貸款咧，我哋都開始見到有啲開始有啲銀行有啲投資者肯做翻，咁但係當然佢哋會比較嚴格啲，譬如佢唔肯做咁高嘅嗰個loan to value，即係佢要你多啲首期咁先肯做。同埋當然佢可能佢平時可以你個債務同收入比例可能可以高啲，但係而家又會要你低啲先做得咁樣咯，或者係嗰個信用分數又要高啲咁樣先做得。我應該差唔多應該講晒㗎啦。頭先 Bob 提過嗰啲嘢。
咁咧想問你咧，如果係投資屋咧，你可唔可以做一個 HELOC 咧？
我哋公司都有少少嗰啲投資者肯做嘅，咁但係咧講真，我自己最近就冇睇過，咁我知佢哋之前有嘅，咁而家有冇譬如佢哋做嘅即條件要謹慎啲啊，或者係佢哋有冇而家仲做唔做嘅話，我就呢個唔係好清楚，我哋再問一問先知道。仲有冇其他？
不如講下你今日咩利率啊？
其實今日我 check 過嗱，如果係細窿嘅話咧，即係51萬樓下嗰啲，咁30年，當你各方面條件都好好，H 年都唔使好，因為我啱啱開咗個係90% loan to value 嘅，你個貸款額同個房價係90%，咁都係3.1250 point 做到嘅。
30年啊
？30年。佢10% 首期咯，叫做。如果係
3厘125喎，
而家嚇
3厘125，
係啊
今日嘅利息 ，OK，pretty nice，
所以都接近之前差唔多最低嗰陣時嘅。
係啊。但係
如果係
而家會唔會即係頭先我哋講到經過呢一個疫情？咁會唔會係喺 underwrite 即係審核一個貸款嘅期間，會係更加地嚴謹，同埋會比之前需要嘅文件提供得更加多咧？
其實文件會係比較嚴謹啲嘅，因為佢即係第一，佢一定要 make sure 你仲有工做。總之，我哋而家去俾嗰個 underwriter 睇嗰陣時咧，其實我哋會已經 check 咗一次有冇工做啦。同埋要睇下佢收入係幾多啦。咁之後咧，即係我哋公司去準備出文件之前咧，亦都要個客人同埋佢嘅僱主簽封信，話佢而家都仲做緊嘢，同埋冇影響到佢嘅收入。咁我哋先至出文件嘅。
咁即係咧，同原先一樣。如果想揾 Annie 做貸款嘅朋友，就應該要預備2年嘅稅表，啱唔啱啊？2年定1年啊？而家你哋公司係？
其實要睇下佢嘅情況。如果係大額貸款咧，就一定要2年噶啦。咁如果細額貸款咧，有時可能唔需要嗰個稅表都得嘅。咁有時可能1年。咁睇下嗰個房利美啊、房貸美佢哋翻嚟點樣講。咁好多時，其實我最近，尤其是嗰啲客人，如果唔係話自僱人士咁樣咧，佢哋好多時都唔需要睇個報稅表嘅。
咁如果而家有啲人係因為公司嘅老闆要求佢哋係去 EDD 攞1個月失業金先嘅，咁佢下個月復工啦，再揾你貸款，你會唔會睇到佢4月份係攞個失業，跟住會影響個貸款咧？
如果佢已經翻去做工嘅話，就唔會影響嘅。我哋最多就會問佢攞封信， 話即係中間發生咩事，點解會要攞呢啲。咁啊，如果佢其他嘢一切變翻正常嘅話咧，基本上係冇問題嘅。
咁我哋有人想睇下30年咧就係3.125啦，咁想睇下15年嘅 full up 固定嘅利率又係50萬以下嘅，咁咪會平過3.125。咁今日係咩利率啊？大概
呢個我要 check 下先得，但係嗱，我可以話俾你聽，大概咧最近嘅30年同15年之間咧係大概差1/4嚟到。
咁頭先你又講過嚴謹咗啲啦，而家嗰個審核嘅情況。咁我哋知道咧，如果買公寓即係 condo，好多時候咧都要攞個 HOA cert， 又會有要求，可能係必須要好多係自住戶多過出租戶，諸如此類嘅。咁你哋又會唔會要求呢一張我哋叫 HOA cert， 即係業主立案法團核證書咧？
呢個亦都係睇下嗰個貸款額。如果個貸款額係72萬6或者以下，76萬5或者以下的話咧，好多時我哋做嗰個房地美房貸美嘅報告嗰陣時，佢可能話唔需要做個全部即係完整嗰個 HOA cert， 咁啊可能做一個比較簡單少少，最主要就係睇下有冇 litigation， 即係有冇訴訟。咁如果嗰個訴訟即係嗰一 part 話冇嘅，同埋個 appraisal 其實都即係嗰個估價報告上面都有寫啲簡單嘅 HOA 資料嘅，咁啊上面都係寫話冇的話咧，咁啊可能可以唔需要嗰個表都得嘅。咁但係如果如果係通常呢個係自住房屋嘅話就可以，但係如果係投資屋嘅 condo 咧，就基本上都會需要噶啦，因為我哋要睇下condo， 如果買 condo 嘅話咧，我哋唔係淨係要審批個客人本身，亦都要審批間嗰個 condo 成個 condo project 係 O 唔 OK 咁樣。
咁你睇嗰個 condo project 咧，你係咪睇如果有個 email 話冇 pending litigation 就可以貸到款咧，就唔需要嗰個 HOA certificate 咧？
有時係可以嘅，要睇個情況。即係如果我哋譬如落Fannie Mae 咁樣嗰個 findings 咧，翻嚟話啲 review 咁樣，咁就可以就咁要佢個證明話佢冇 litigation 咁啊都得噶啦。
咁咧就有人想問咧，就乜嘢係屬於 low 或者 high loan amount 咧？你可唔可以分開幾個 category 咧？例如好似51萬打下 and then 另外個 number。
首先 conforming 咧就係51.400嘅，即係嗰個係最細嘅金額。咁嗰個一般嚟講係會最容易去審批，因為佢係完全係 Fannie Mae、Freddie Mac， 即係房地美、房貸美嗰啲會買翻佢嘅。咁下一個tier 咧就係51.400以上到76.5萬。咁嗰個 tier 我哋就叫做 high balance 嘅，亦都係美房貸美，係佢哋嘅審核條件會比較嚴少少。如果超過76.5萬的話咧，咁啊就係一個真正嘅大窿，我哋叫jumbo loan。咁嗰啲就唔關政府房地美、房貸美嗰啲事噶啦，所以有時嗰啲係自己啲投資者自己揀佢哋想點樣做，佢哋決定。所以會比較上係嚴謹啲嘅，佢哋去審批嗰陣時，即係佢哋可能好多時嗰啲貸款佢唔會賣出去嘅，自己銀行 keep 翻住佢。
咁頭先較早前阿 Bob 提到關於 Bank Statement Program， 你可唔可以講多一次啊？乜嘢為之 Bank Statement Program？ 我諗我哋有啲觀眾會唔明白。咁係咪要提供12個月，還是係24個月，定係上個月將 Bank Statement 咧
？OK， 嗱呢個 Bank Statement Program 咧，一般嚟講都係愛嚟俾人士用嘅。因為好多時佢哋可能報稅上面係會有好多啲嗰啲write off， 即係冇正式收入報上去嘅收入就冇咁高。咁但係咧，我哋可以睇到佢啲收入係喺佢個 bank statement 上面，咁你就可以用嗰啲數字、嗰啲存款當係佢嘅收入嚟咁計。咁但係咧當然我哋都知道你每個人做生意都會有啲費用㗎嘛，係咪？咁嗰啲就視乎每間銀行佢會減幾多出嚟，最多可能50%。咁但係之前有啲係譬如佢叫個 CPA 寫封信話佢個 expense 係有幾多，咁佢就用嗰個數字。咁而家就可能會比較嚴啲㗎啦，呢啲都。咁至於幾多個月咧？14個月又有，24個月都有。咁如果你可以俾到24個月嘅話，價錢就會好過12個月嘅。咁之前未有呢個疫情發生之前咧，係1個月嘅 statement 都得㗎啦。咁但係暫時呢啲投資者就暫時擱置咗呢啲 program。咁希望過多幾個月或者甚至更加快會翻嚟，咁就可以幫到多啲人買屋或者重貸咁咯。
咁即係話而家嚴咗啲，你哋銀行都係偏向係喺 bank statement income 入邊取50%，比喻作當為係收入嘅啫喎，你哋都唔會攞高過50%，即係我每個月存1萬，你就會睇到等於我係有5000蚊收入，啱唔啱啊？
係啦，冇錯，暫時應該佢哋會用咁樣嘅方法去計咯。
OK，咁我睇下其他觀眾咧，好似都好 OK 啦，冇咩特別嘅問題喎。如果有特別嘅問題咧，歡迎聯絡 Annie 嘅手提電話係650-307-0928，或者可以聯絡我哋美國華人實業協會，向我哋索取 Annie 嘅電郵地址或者其他嘅聯繫方式。Yes, Nelson， 你有問題？
我想問下 Annie， 如果一個 condo building 咧 mix 有20 unit， 有20個 unit，commercial and residential mix， 咁一個 owner own 咗一個4個 unit， 咁disqualify from Fannie and Freddie 係咪？咁你哋有冇其他啲 investor program for 呢一種 refinance？
就叫做non-warrantable condo 嚟㗎啦。咁我哋都有啲銀行肯做嘅。如果你有興趣嘅話，你可以將成個 scenario 話俾我聽，咁我再幫你問。
Okay, very good.
Hi Annie, this is Sophia. I have a question.
Hey, hi Sophia.
Hi, what is the percentage of the listing or people like what is the market drop to like right now? How many? What is the rate like in terms of people applying for the mortgage with mortgage?
Listing. So the total volume? Mm-hmm.
Yeah, the total volume of.
Bob, do you know?
You have to unmute yourself first, Bob.
I'm sorry, what was the question?
What was the increase in application rate?
What was the increase?
Yeah.
Oh my God. All I know is that first week of March, we originated loans that we typically do in 3 months.
You tripled the volume.
Yeah, in 1 week.
1 week.
And that was just us. So if you multiply that by the various lenders out there, that's why the whole banking system got overloaded. We want more though.
Bob, so are those cash out refi or purchase? The 300%?
All of it.
All of it.
Oh, well, I would say most of the increase probably was from rate and term, and then, followed by purchase and cash out.
Bob, there's a question asking, what is the approximate refinancing rate for investment property for a 30-year or a 15-year fixed, assuming all credit is amazing?
On a conforming, which would be under 500,000, you're probably looking at about 3.25 at par. On a owner occupied, on a non-owner occupied, I'm going to defer to Pov because I haven't priced that out today.
For a non-owner, I just priced it. It's at 3.99, and that's considering all like perfect scenario.
The lowest rate we saw when the rates dropped to the floor at the beginning of March, I think it got down to 2.75 at no points on a 30-year fixed owner occupied under 510,000. I mean, that was for 2 days. And then it bounced up a little bit and then it went completely up after the market got saturated. But we're about 3.25 right now.
Yeah, what I'm recommending all you realtors and clients now is that get your application ready, because when rates drop, like, you know, lesson learned in March 2nd, right? It only stayed low for 2 days, literally for 2 days. So when rates drop, you want to be in a position to lock. And if you miss that window of opportunity, it takes a long time for it to come back, if it even come back.
Victoria, I was going to mention to you, I don't know if it'll be helpful, but we have some great articles and stuff on forbearance. If you want me to send you the links on that stuff.
Yes, please. So we can put it on our website too, may we?
Yeah.
Thank you, Bob. Okay,
Yeah.
so I think our sections is done today. Thank you so much, Paul, Bob, and Annie for being here. So if anyone should have any questions, feel free to contact CREAA or Annie directly. Her cell phone has been mentioned at the chat room, and should you have any other information that you may need, please contact CREAA. So thank you very much, and we will be starting our next sessions with topics named 1031 exchange. I believe we will have a lot of situations that we are in the middle of an exchange, but the COVID-19 just suddenly arrived and having shelter in place enforced. So what should we do? We are proudly to have Wai Ming Pang from Assets Preservation to talk about it, to tell us about it today. Hello, Wai Ming.
Hi, everybody. Let me see if I can turn on my video for a second.
Would you please?
Yeah, how do I start the video? Oh, there we go. Hi, everybody. Yeah.
I think the first session is in Canton. In Cantonese. Just, you know, that's sorry, guys.
OK， 冇問題。大家好，我名係偉明，彭偉明，我係Asset Preservation 嘅 Division Manager。我哋公司就係做1031嘅。Recently 嗰個 COVID-19，我哋有好多client 好多客做唔到1031，不過IRS 喺4月9號嘅時候release 咗個建期俾大家，佢哋話如果你嘅1031第45日定係第180日喺4月1號到7月15號之間咧中間咧，咁你會有個 extension 去到推遲到7月15號。俾我 explain 喺個1031咧，你開始就係你關 escrow 嗰日。喺你關 escrow 嗰日咧，你有45日嚟揀3間屋，咁你諗住想買嘅，不過你有總共180日咧嚟關 escrow， 買新嗰啲屋關 escrow。咁IRS 講，如果你本身個第45日定係第180日咧，喺4月1號定係喺4月1號到7月15號中間。佢會推到7月15號。OK， 咁樣依家咧，我哋仲未到嗰個時間。我有好多嗰啲客人咧，佢哋話：如果我依家關 escrow， 我今日關 escrow， 咁我哋點樣會可以攞到呢個 extension 呢個建期？ 咁個見期咧係 automatic 嘅。如果你今日關 escrow，你哋45日咧就係6月2號，因為個6月2號咧係喺4月1號同埋7月15號中間，你嘅第45日咧，依家咧就係7月15號，你哋180日咧就係11月27號。Does that make sense?
好，我哋重複一次日期好唔好啊？頭先喺日期方面或者寫唔切啊，可唔可以
sorry。如果你第45日定係第180日咧，喺4月1號到7月15號中間咧，咁佢會推到7月15號嘅。
Okay.
What is the advantage of extension 103日？個 IRS 俾我哋呢個 extension 咧，因為個 COVID-19 COVID-19 如果有好多客咧，佢哋唔得出去睇嗰啲屋，買到嗰啲屋啊嘛，咁佢買唔到咧，就有個 failed exchange。呢個 extension 咧就係如果個時間咧 falls between 4月1號同埋7月15號，咁你會有多啲時間嚟揾嗰啲屋，定係揾新嘅屋嚟買。因為如果你45日咧之前你俾咗我個 list， 你講咗我聽你想買呢3間屋，不過因為個 COVID-19 你出唔到去又買唔到屋，咁你 fail 咗你嘅 exchange 嘅時候咧，你要俾稅啊嘛，咁個 IRS 俾你多啲時間揾3間新嘅都得3間屋嚟買。Explain a bit about 1031 exchange. People. 點解嗰啲客人做1031咧？如果你賣咗你間屋嘅時候咧，你hopefully 你賺到啲錢。不過你賣咗嗰間屋嘅時候咧，你唔想交嗰份稅先啊嘛。咁你做1031咧，你可以用晒嗰份錢嚟買新嘅屋嚟投資嚟租出去。Does that make sense？
咁自住啲屋可唔可以咁樣做咧？如果我自住，我可唔可以換屋咧？或者我一定要係投資屋咧？
自住嗰啲屋咧就做唔到1031嘅。不過如果你租咗一間房定係你自己用一間房嚟做工嚟打工，咁你就嗰部分咧，嗰間房咧就可以用嚟做1031。譬如講如果我自己有個 home office 喺屋企，我報稅嘅時候放咗係20%，咁我賣我間屋嘅時候咧，譬如講100萬，咁20萬嗰部分咧可以用嚟做1031個 20%，因為我報咗稅，話嗰部分係我home office。不過第二個80%咧，個80萬咧嗰部分咧就可以用個 homeowners exclusion。如果我係 single 咧，我可以攞到25萬tax free。如果我係 married 咧，咁我就可以攞到50萬。Any other questions？ 仲冇咩問題？
我諗緊點樣問。
咁你平時啲費用咧係大概幾多錢嘅咧？如果你要做一個1031，
如果你想做一個1031，你買一間屋咧就係700，你買夠3間咧，就總共3間就300蚊。你買一間都好，就一樣300蚊；買2間都好，一樣300蚊。買到3間都係一樣300蚊。咁總共咧就1000蚊。
威明
Yes。
威明哥哥，
我想問你咧，即係如果即係我有個客咧，之前咧佢就有一間屋係佢自己 own 嘅，係投資屋嚟嘅。咁咧佢就賣咗間屋咧，佢想換一間屋咧，但係因為個 income 唔夠咧，咁佢想加佢個女入去。你知唔知嗰啲 taxation 方面嘅問題會唔會有即係 IRS 會點計啊？佢即係 you know what I mean？
Yes, 我知道。佢賣咗嗰間屋咧，咁佢想用嗰個女嘅 income 一齊嚟攞個 loan 嚟買新嘅屋，咁樣就可以。不過睇下佢賣咗嗰間屋係幾多錢，同埋佢買翻個新嗰間咧係值幾多錢。Let me explain。嗱，如果佢賣咗佢自己嗰間屋係100萬，咁佢買新嘅屋咧110萬。佢自己咧，因為如果佢係做1031咧，佢要 own 自己喺 title 嗰個名喺 title 係等於100萬嘅嗰間屋嗰個 percentage 係whatever amount that is。咁佢女咧係 on title 咧可以放喺10萬。如果佢買多啲咧，買貴啲個屋咧，咁樣就not a problem， 冇問題。不過如果佢買一樣價錢咧，定係低啲咧，咁佢加唔到個女喺 Untitled。
威明啊，我嘅問題係咧，頭先你講到咧係4月1號或者之後到期嘅，即係 expire by April 1st 嗰啲會 extend 到 July 15，係咪？即係7月15號啦。咁如果我到期嘅係5月1號先到期嘅原本，係咪都一樣係 July 15咧？
一樣推到 July 15。
都係只係推到 July 15嘅啫，而家。你會唔會？你會唔會覺得有機會可能到時個 COVID-19 is still not under control， 疫情未受到控制，而會再有 extension go further from July 15？
可能依家個 IRS 就係放一個嗰個延期啫，個延期就係去到 July 15。不過咧，佢冇答一個問題。個問題咧就係喺2018年嗰時候，佢哋放咗個 notice 出去，係俾個延期話，如果有個 natural disaster，好似呢個 COVID-19 咁樣，咁嗰啲人咧就攞到120日嘅 extension。依家佢哋冇講我可以攞到 July 7月15號，同埋多120日啊，定係就係July 15？佢哋冇答呢個問題。咁依家有好多taxpayer， 好多客好多公司佢哋都寫啲信俾個 IRS 話，我哋係咪攞到7月15號同埋120日咧？定係就係7月15號？
咁 IRS 又有冇指引話，如果譬如我屋企人或者我自己係 COVID-19 嘅 patient victim， 咁樣嘅情況會唔會再有其他嘅 exception 咧 ？Any exceptions for those who is being infected？
依家冇，佢哋話全部嗰啲人依家咧就可以退到7月15號啫。
咁咧有人問咧，如果你唔買個 full amount 咧，咁比如你買咗一間屋100萬啦，咁咧你想買一間90萬咧，咁有咩影響咧？
嗰個 difference 嗰部分你冇用咧，個10萬你冇用咧，就要打稅噶啦。
即係冇用得盡你嘅 profit 嗰筆錢，你要去打稅嘅。OK，咁 do we need proof of for the business use of home？
Oh yes，我頭先講如果我係報稅報20%係個 home office，咁我要報個稅喺我稅嗰度寫低㗎。如果你就咁講，我用咗10%，我用咗40%，如果你冇放喺你嘅 tax return 咧，就咁樣就唔算㗎啦。
咁如果我寫咗1年，但係我又 hold 咗呢個 property for a few years，but just that before I sell it last year I reported the business use for just 1 year tax return， 咁又得唔得㗎？
夠㗎啦，咁樣就夠，最少1
咁
年。
樣就夠，1年就會夠㗎啦。OK，好。我哋仲有冇其他觀眾有啲問題，或者佢哋嘅 client 朋友會遇到關於交換1031交換計劃嘅問題？So any questions for 1031 exchange? Either
有啊
from family or
有啊
friends?
有。
From Stephen, yeah. Stephen, I know when we do it, 我知道我做103日嘅時候個 taxes 係 defer， 不過你以後咧你會俾呢份稅嘅。如果我搬入嗰間屋嘅時候咧，個新個 investment property， 我要唔要俾嗰啲稅？That's a good question。好多人都係咁樣用過1031。個1031咧就係講，如果你以後你賣咗嗰間屋嘅時候，你唔想做1031咧，咁嗰時候咧，你就要俾呢份稅啦。不過如果你以後你搬入嗰間屋咧，retire 喺呢間屋咧，咁你就唔使俾呢份稅啊，因為你冇賣嗰間屋啊嘛，咁冇稅咯，唔使俾稅住先。
咁你再重複一下得唔得咧？咁如果嗰間屋咧就佢做咗1031，咁咧佢租出去1年啦，或者2年啦，咁咧我就搬翻入去嗰間屋啦。咁我要搬翻入去幾耐咧，我先可以攞翻嗰25萬或者50萬唔使俾稅咧？有冇時間㗎？
有，你搬入去最少要2年，因為個 homeowners exemption 話，如果你住咗喺嗰間屋最少2年，喺呢5年中咧，你住咗2年，咁樣你就可以攞你嘅25萬exemption 定係50萬，如果你係 marry。不過喺2009年嗰時候咧，個 IRS 講個 government 講，如果你係咁樣做咧，因為以前咧好多人都係咁樣做，佢做咗1031，然後搬咗入去咧就攞呢個 exemption 唔使打稅噶嘛。咁佢哋喺2009年開始話，如果你係咁樣做咧，你係搬入嗰間屋，你用個1031嘅錢嚟買嗰間屋咧，咁以後嗰份稅咧，你一樣要咁樣打稅嘅。譬如講as an example， 如果我依家做1031，我嘅 tax bill 我 owe 10萬蚊咧，咁我以後我賣咗嗰間屋我搬咗入去個價升咗嘅時候咁我賣咗佢，喺嗰份錢我賺咗嘅新嗰間屋嗰度嗰份錢我賺到可以攞個 exemption。不過以前我 owe 過呢10萬咧，我一樣要俾稅。呢10萬咧就打唔到嗰個 exemption。
咁咧想問你有2個 question， 一個咧就係1031咧係咪買咗一間一定要買一間嘅，或者我賣咗一間我可以買2間啊、3間啊、10間咧？嗰個第一個 question。
你買幾間都得，不過你就要 follow 2個 rule。第一個 rule 咧係，如果你想買3間屋咧，呢3間屋幾多錢都得。如果我賣咗係100萬，我可以買一間屋10萬，我可以買第2間屋1000萬，第3間屋50萬，幾多錢都得。不過如果我買多過3間屋咧，我買4間定係多啲咧，全部呢啲屋我揀到，我買到呢啲屋咧，加埋嚟嗰個 value 咧唔得多過2倍，我賣咗嗰間屋2倍。如果我賣咗100萬，咁我想買4間，總共咧我就可以買到200萬嘅。
咁咧 Nelson 有個 question 就係話，如果佢好多年前咧買咗間屋50萬，咁呢間咧佢就賺咗50萬啦，咁佢就賣出去100萬，咁咧佢可唔可以買翻再換一間屋買係51萬，或者佢一定要買一間屋超過100萬咧？
咁樣就係如果係個 investment property 咧，你係用呢間屋嚟出租咧，咁樣你就要買1 million。不過如果你係自己住嘅咧，咁你就唔使買新嗰間。 因為你個500,000你個50萬嗰啲 gain 咧，如果你係 married，你可以用個 exclusion 攞晒呢部分。
So basically 咧，就如果係投資屋咧，佢賣咗間屋100萬，咁佢買間51萬，咁佢就要打稅49萬啦，係咪？Did you hear me, Wei Ming?
Yes.
So basically, if they bought the property for 1 mil or sold the property for 1 mil and only bought something for 510, that means their taxes is based on 490 then, right?
You are correct. 咁你喺呢個 example 咧，你打稅咧就係49萬。你點樣可以 prove 兩個人住間新same 屋to get 500,000 tax-free exemption？睇下你點樣報稅。你報稅你會放你嘅地址嘛？你個 home address。
咁咧，呢家有少少時間咧，你可唔可以講有唔同種個1031咧？你可唔可以講嗰幾種1031個 example 俾人哋聽下咧
？Oh yeah, absolutely。我哋有3種exchange，我哋有好多客嘅會用嘅。第一種咧係個 regular exchange，喺個 regular exchange，你賣咗你間屋，關咗 escrow 嗰日開始有45日嚟揀新嘅屋嚟買，不過總共咧有180日嚟關 escrow， 嗰個就係 regular exchange。你賣咗你間屋先，然後你先買新嘅屋。第二種 exchange 咧就係就係叫個 reverse exchange。喺個 reverse exchange 咧，你買咗你新嗰間屋嘅時候咧，咁樣你有45日嚟揀你想賣邊間屋。如果你有幾間，你可以揀。不過你總共咧有180日嚟賣你嗰間屋，嗰個就係個 reverse exchange。你買先，然後先賣。第三個 exchange 咧係個 construction exchange。嗱，個 construction exchange 可以俾你用晒你嗰部分錢嚟起嗰間屋嚟裝修嗰間屋譬如講我賣咗我間屋係100萬，我買新嗰間屋咧係80萬，我仲有呢20萬我仲未用。如果我唔用呢20萬咧，咁我要喺呢20萬嚟打稅啊，要俾稅。不過喺個 construction exchange 咧，我可以用呢20萬嚟裝修嗰間新嘅屋，嚟起whatever capital improvements，新嘅牆新嘅 roof new unit 咩 construction 都得。
Thank you。咁咧有另外一個 question 咧，就係問。當然你頭先答咗啦，嗰兩個人要住喺同一間屋，點樣攞50萬唔使打稅啦？你就話佢點樣報稅啦 ，right？咁咧另外個 question 就嗰兩個人係咪一定要喺個 title 咧，喺個屋契咧？同埋第三咧，佢就話要咪淨係話喺個報稅單嗰啲人喺度住就得，佢哋唔喺個屋契得唔得咧
？OK， 嗰度有兩個 question。如果佢想攞嗰個25萬個 exclusion 定係50萬嘅 exclusion 咧，佢哋一定要喺 title 度。如果佢哋唔喺 title 度，唔係佢哋嘅屋唔算佢哋嘅屋。佢哋係咪一定要喺度住咧 ？No。如果你報咗嗰間屋係你嘅 address， 咁嗰間屋就算你嘅 home， 你嘅primary home。你唔係一定要喺度住。
OK， 我有個問題啊。如果係我有100萬，可以交換3間唔同嘅物業，每間用33.3千幾咁樣啦。咁銀行 OK 噶嘛？呢樣嘢
？Oh yeah，銀行會 approve 如果你係攞3個 loan， 定係好似to my knowledge， 銀行俾10個 loan，right？Is it total of 10 loans？ 其實我哋冇問題，我哋有啲客佢哋買50幾間都有，10幾間都有。
咁你會公司會出一啲紙張話我哋係做緊分3間屋，俾銀行睇到我哋個 exchange amount 嘅係咪啊？
係啱。
OK， 好。係 Janice Lee， 你啱啱仲有個問題係咪？
唔係，佢話佢已經答咗啦，係話嗰個人喺嗰度住，喺個 tax return 話佢個地址喺嗰度，不過佢冇喺個屋企。So 威明已經講佢哋一定要喺個屋企咯。
哦，佢哋喺 title 咧就要喺一定要嘅，不過佢哋要唔要喺自己嗰度自己喺嗰間屋度住咧？唔係一定，佢報咗稅話呢間係佢哋嘅屋，佢可以travel 2年啊，翻嚟一樣咁樣住。Adjustment by change to
Hey. Here, let's do another Chinese question.
Okay.
What if
Janice?
someone was added to the title 2 years out of 20 years? How does that affect the exchange? So I think I think that you explain what the exchange is. They add 2 years, but 嗰個人係咪度住咧 Helen? So the question is, what if someone was added to the title 2 years out of 20 years? How does that affect the exchange? I guess you need to explain what needs to happen in order for you to do an exchange again.
OK， 如果你想做個1031咧，呢間屋咧應該係投資嘅，出租嘅。如果冇出租過咧，呢1-2年前咧，咁你唔得做你做唔到個1031㗎啦。就係咁樣加佢哋嘅名喺 title 2年，睇下你幾時交。如果你加咗喺2018年，譬如講2018年開始，咁喺個佢報稅嘅時候，喺2018年開始話係佢間屋，佢喺度住，咁樣咧佢就可以攞個home owners exclusion。嗰個 home owners exclusion 咧係你喺嗰度住噶嘛，你住過咁樣先算，唔係出租嘅屋。1031咧係俾出租嗰啲屋，唔係自己住嗰啲屋。Does that make sense?
Oh, I guess on the same line as Helen's question is, it's been an investment for 20 years, but they just got added to title for 2 years recently. Like basically it's been rented.
Okay, yeah, 冇問題。如果你 if it's always been an investment property, investment 20年啦，咁樣你攞唔到你嘅 home owners exclusion， 因為你冇住過，你自己冇住過。你喺 title 咧又冇所謂，因為你係你嘅 property， 不過你攞唔到嗰個 exclusion， 因為你喺稅嗰度你冇報話你喺嗰度住嘅。
What will be the adjustment if I change the rental property to self-resigning usage?
What will be the what? I'm sorry?
Adjustment. What will be the adjustment if I change the rental property to self-resigning usage?
冇咩 adjustment 啊，你就報喺稅嗰度話，哦呢個唔係你冇 collect rent 啊，你就係放住喺你嘅primary residence， 你依家喺度住。Name collect rent.
How long does the person need to be entitled to claim the deduction? 係咪講到1年都得啊？
To do the deduction? No, the homeowners exclusion 話你住過2年，喺你最後你5年後咧，呢5年咧最少要住過2年就可以攞到。不過呢間屋咧係個 primary residence， 唔係個 rental。
Okay.
I think we should start the English session soon, and if there's any other Chinese questions, just post it and tell us to respond in Chinese.
Okay.
Okay.
Go ahead, Wei Ming. Can you tell us
I'm sorry.
about
I was waiting for a signal. Hi, everybody. My name is Wei Ming, and I'm with Asset Preservation. I am the division manager for the Bay Area. And what we do as a qualified intermediary, as a 1031 exchange company, is we facilitate and help clients with their 1031 exchange. Now, before we go into any more information, the 1031 exchange is just for investment property, or rather, any part of a property that has been rented out or used for business will qualify for 1031 exchange. And when I was speaking in Chinese at first, I had the example, what if I had reported on my tax returns a home office, and that home office is 20% of my home. Well, if I sell this home for $1 million, 200,000 or 20% of that home, I can do a 1031 exchange, because to qualify for an exchange, I need to rent it out, or I can use it as a home office, either one. And because I've used it as a home office, I can use that 20% to do a 1031 exchange. That 80%, whatever capital gains I have, I can take my homeowner's exclusion from that. So recently, in April 9th of 2020, the IRS has issued a notice, and it is an extension to all of our clients and anyone looking to do a 1031 exchange. In a 1031 exchange, from the close of escrow, you have 45 days to identify potential replacement properties and a total of 180 calendar days to complete your transaction by purchasing and closing on the properties you have identified. Now, because of COVID-19, a lot of our clients have been unable to go out, look at properties, or buy replacement properties. And their 45-day or their 180 could have been in, I don't know, April 15th or April 10th or sometime this month. Well, this notice from the IRS is basically saying, if your day 45 or your day 180 lands between April 1st and July 15th, you automatically get an extension on these dates to July 15th. I actually had a client today who was looking to do a 1031 exchange, and they're going to close on the 21st. What does this mean for my client? Well, if my client closes on the 21st, their original day 45 would be sometime in June. I think it was June 4th or something like that. Well, now it's not June 4th. It gets pushed all the way to July 15th because of this extension. So this extension gave a little bit of extra time for my clients, and it would allow them to have more time to either complete it because it was in their 180 days, or if they already submitted a letter, they may be able to revise that letter if they submit a new one. Okay. Does anybody have any questions regarding that?
如果大家未有其他問題之前，你可唔可以提下我哋一啲我哋有時會忘記嘅規則啊？喺1031 exchange 入邊 ，which means that can you remind every one of us the most mistake that realtor or a buyer will make during the exchange, during the transactions?
The mistakes in a 1031 exchange. One of the mistakes I encounter is a lot of people buy a replacement property thinking, oh, I'm going to move into it right away. In a 1031 exchange, when you buy the replacement property, the new property, you're supposed to use it for business, investment, or trade use, meaning I'm going to need to rent it out, or like some of my clients, they may buy a I don't know, commercial property to operate their business out of it. That's completely fine. They don't need to be collecting rent from themselves as long as they're using the property for business use. So that could apply to a lot of real estate agents as well. Now, in that scenario, if a client were to want to move into the property, however, the intentions, what their original use for the property should be for investment purpose. If 2 years or 3 years or however many years down the road, you decide, hey, I don't like my tenant anymore. They're causing so much damage or whatever, you know, has changed, whatever reason has changed your mind. You can, you know, if you can get the tenants out and you can move into the property. When you do that, there are no taxes due. In a 1031 exchange, what you're doing is you're basically saying, I owe you to Uncle Sam. I sell my property, I make some money, and I have to pay taxes on that money. A 1031 exchange basically lets you say to the government, Uncle Sam, saying, you know, I owe you this much money, but I'm going to pay you at a later time because I'm going to do a 1031 exchange right now. And the only time I would need to pay that tax is if in the future I decide to sell that property and I don't want to do a 1031 exchange anymore. It's just like, you know, I don't mean to use your name, like, but let's say Janice is Uncle Sam. I sell this property, I owe her $100, for example. Janice will never forget this, all right? I can be doing 1031 exchanges for the next 30, 40 years in the future. And I keep telling Janice, I'll pay you back, I'll pay you back. But I'm doing 1031 exchanges, so I don't need to pay you back right now, but I'll pay you back in the future when I don't do a 1031 exchange. And 40 years later, I finally decide to sell the property and not do an exchange. Well, at that time, I'll need to pay taxes on the gains I get from selling that property in the future. And now I owe Janice that $10 I owe her 40 years in the past, all right? So that's the purpose of the 1031 exchange is I keep on saying I owe you to Janice, and I get to use all that money to buy more real estate for myself, to buy better real estate, to get me into a better location, better cash flow, so that the money that $10 that Janice would have collected from me 40 years ago, that $10 has been working for me for the last 40 years. And obviously,
Is there a time when I won't get my $10? Like, what if you never sell, and then you pass away? What happens then?
oh, well, unfortunately, Janice will not be able to collect from my grave. Janice will never be able to collect from me if I keep on doing exchanges and I pass away without ever not doing an exchange. So here's how a lot of clients are passing on wealth to their kids or to their heirs or to whoever you want. When I pass away, whoever I'm giving all my properties to, they can get that property, inherit that property from me at a step up in basis. And when they sell it, you know, granted, it doesn't pass a certain limit, inheritance or estate limit, they may be able to pocket everything tax-free. Janice can't go to my kids and say, remember, you know, Wei Ming owe me $10. I'm here to collect. Well, Wei Ming is dead. Can't collect from Wei Ming. So the idea behind it is I'm using all this money, because it's not just $10 in real estate. We're talking tens of hundreds of millions of dollars. I'm using all this money to reinvest in real estate, get me cash flow, so the money is all working for me. And when I'm gone, well, unfortunately, Janice can't collect her money.
Can we go back onto an example that someone mentioned earlier, and we talked about it in Chinese. I think the English speakers left would probably want to hear it. So if I bought a property for 500,000 and I sold it for $1 million, do I have to purchase a property over $1 million to avoid taxes?
$1 million or more to defer all your taxes. Anything less than that, you pay taxes on the difference. So that's
So let's use the example they said. I sell a property for $1 million. I bought it for 500 and I go buy a property for 510,000. It's more than what I originally bought my property for. Do I still need to pay taxes?
Yes, you do, because you still have a remaining balance of $490,000. That difference is taxable. It's taxable boot. So basically, the IRS says, hey, you sold it for that million, you gotta spend that million or more because it helps them with you investing in the real estate industry. If you're not gonna reinvest that amount, they're not going to give you the full tax break on, not tax break, but full deferral on your taxes because you didn't spend the whole amount. Whatever you don't spend, it's whatever you got to get taxed on, up to your capital gains.
So there's a question, if the 1031 house is in California, when they sell, does it have to be, when they buy another property, do they have to buy in the same state? Can they buy in a different state, different county, different city? Can they buy international?
So that's a good question. It does not have to be the same state. In a 1031 exchange, as long as you sell investment real estate in the United States, you can buy anywhere in the United States or US territories. But territories have additional requirements. Now, here's the thing about the exchange. You can't sell in the US and buy in, let's say, Australia, buy in Asia. That's international, doesn't work. Sell in the US, buy in the US, or sell outside the US and buy outside the US.
Here's another example that everyone wants to know about and a lot of people don't know about. Can you give us an example of a person who lives in the property and rents their in-law and wants to, and that person's lived there for 2 years out of 5 years and they want to do an exchange. Can you provide an example of how I can get my 250 plus 250 no tax and also still do an exchange because I, bought it for 100,000 and I, still got to pay taxes because the 500,000 is not enough?
Yeah, absolutely. So would be a little hard without showing pictures or slides or anything, but I'll try my best. Let's say, for example, I bought a property for $100,000, make it easier, and now I can sell it for 900. All right. I'm sorry, not 900. I can sell it for $1 million. If I sell it for $1 million, my profits, my gains is $900,000. Now, in this example, even if if I'm married, I can take my 500,000. Okay, that's fine. Can take my 500,000, but I still have $400,000 of profits that I need to pay taxes on. If this house is 100% my home, my primary residence, I don't rent any of it out, I have to pay the taxes on the 400. No way around it. However, if I know that that's the case and I plan to sell this property in the near future, I'm going to be thinking, well, I have roughly 400,000 in gains, in profits that I have to pay taxes on. How do I structure it so I can utilize and take advantage of the 1031 exchange? Here's how I would do it. Let's say I call up Janice and say, hey, Janice, this is a duplex, equal size. It doesn't have to be a duplex, but let's say it's duplex. They're equal size units. And I'm saying, hey, Janice, do you want to rent one of the units from me? On my tax return, it's going to be 50% of this property. On the lease agreement, it's going to show they're equal size and she's renting out the one whole unit from me. Now, in the future, when I sell this property, how do I look at it? I look at it almost like the sale of two properties. One for the sale of my unit that I'm living in, and one for the sale of the unit that I'm renting out to Janice, so that it's 50-50 divided in the middle. Doesn't have to be 50-50. If one unit's smaller than the other, you can have that determined by your CPA, and they can help you on your tax returns. But in this example, it's 50-50. Why does this help me? Because I bought both units for $100,000 and I'm selling it for $1 million. But when I split the numbers, I bought my unit for $50,000. I bought the unit Janice is living in for $50,000. and I can sell my unit for 500, how much money am I making from my unit? I'm making $450,000 from my unit. If I'm married and I can take that $500,000 exclusion, well, that covers the whole $450,000 profit, and all that money from the unit I'm living in, that's tax-free. That goes in my pocket. I don't have to worry about it. Now let's move to Janice's unit, the unit she's renting from me. Can I take a homeowner's exclusion on that? No, because I'm renting out that unit. It is a rental property, not a primary. When I sell that property, I'm going to need to do a 1031 exchange for $500,000 or more. And this is excluding any closing costs calculations or depreciations.
So there was. Mhm.
Go ahead.
Oh no, are you done with this example?
Mhm.
Okay. Someone asked if they report their illegal in-law income, can they do this with an illegal in-law and be able to do an exchange too?
Absolutely. So for a 1031 exchange, as long as you can prove that you're collecting income from any part of your house and you report it on your tax return, that portion of your property is now eligible for a 1031 exchange.
And how long do you have to rent that property for in order for you to be eligible for an exchange?
The official answer is as long as possible.
Oh, and by the way, this is being recorded, so I just want to let you know that.
Yeah, no problem. So the official answer is as long as possible. But realistically, in real life scenarios, you probably want to ask your CPA, because a lot of CPAs will agree 2 years and longer are more conservative, and they will most likely they will sign off on that. Anything between 1 to 2 years, it's probably a little aggressive, and some CPAs may or may not sign off on that. But even some CPAs will say have at least two tax returns, two years of tax returns before you should do an exchange. It's what their recommendation would be. Anything less than 1 year would be extremely aggressive, but that doesn't automatically disqualify their 1031 exchange unless they have, especially if they have some special circumstance. Now, if you're saying, hey, I just don't like this neighborhood anymore or where my property is, I want to exchange for a different property, probably not a very good excuse. If it was, I have had a client who sold a property and said, I had permits to build a multi-unit property on this. I was going to rent it out. And then somebody came in 10 months and offered me double what I pay for this property. They took it. They're doing an exchange. Their CPA okayed it. So they're moving forward in exchange. Can they? It's a little aggressive usually because it was only 10 months, but it was a special circumstance for them because they had bought it for, like 2.6 mil and they sold it for 5.4. Almost a no-brainer. They took it. So special circumstances for things under a year, but for many investors, ideally aim for 2 years or longer.
Someone also asked, can you talk a little bit about the 1031 exchanges to opportunity funds or opportunity zones?
Absolutely. So I have a lot of clients who want to compare the two. So with opportunity zones, the great thing about that is you only need to reinvest your gain. And once you invest it in the opportunity zone for a certain number of years, you get an increase in your basis, which kind of loosely translates to you get like a discount on how much taxes you owe. In an opportunity zone, you're not deferring your taxes indefinitely like a 1031 exchange. You owe your tax in 2026. Once 2026 hits, you got to pay whatever taxes you owe. But you don't have to just reinvest from real estate. If I sold stocks, I make money, I can put that into an opportunity zone to defer taxes until 2026. So why are a lot of investors comparing the two? Well, here's one of the major differences, major decision breakers for a lot of people. If I sell my $1 million property and I make $100,000, I might consider opportunity zone. Why? Because I only need to put $100,000 into the opportunity zone. But within 30 months, I'm supposed to double that investment. So that means I would have $200,000 in the opportunity zone. Now let's look at a 1031 exchange scenario. In a 1031 exchange scenario, I sold my property for $1 million. I'm buying my property for $1 million. Well, what's the difference? I sank $1 million into real estate, or I sank $200,000 into the opportunity zone. So in one case, the exchange, everything has to be sunk in for me to defer my taxes. Opportunity zone, I get to keep my original money, my basis, the money I originally sank into whatever investment I just recently sold. So for a lot of clients, if I have more gain than the original amount of money I sank into the investment or my basis, then an opportunity zone may not make as much sense as a 1031 exchange. If I have very little gain, then I might put that into opportunity zone because I get to keep my original basis. I know it's a long explanation. Sorry about that.
No, that's great. Thank you. Are there any other funds or things that people can do? Let's say they don't want to pay taxes, but they also don't want to buy another property and manage another property. Are there other things they can do, and are there restrictions?
Yes. So there are 4 things that comes to mind if we're talking real estate here. For many of my clients, it's what a lot of these realtors in this Zoom video know, what I call individual properties. Clients buy the property, they'll manage it themselves, or they'll have a management company or somebody to manage it. That's a lot of my clients. For clients who may want a little hands off, I have seen UP-REITs. UP-REITs is when the REIT buys your property in exchange for a share of the REIT. That is possible. It is not possible if they don't buy your property. So if you sell yours to a third party and try to buy into a REIT, does not work with a 1031 exchange. If they buy your property in exchange for a share of the REIT, yeah, you can exchange into that, not a problem. That's called UP-REIT, a little different. The third thing is a triple net property, commercial property. We're thinking Starbucks, we're thinking gas stations, a little more expensive commercial property where you don't have to, take care of the little things, if the toilet breaks or something like that. Starbucks isn't calling you to fix that. They'll handle everything. So it's a little more hands off. Now, the last thing is a DST, a Delaware Statutory Trust. And the way I think of DST is it's a much larger triple net property with more investors, and sometimes it's in a portfolio. So think couple hundred unit apartment buildings, medical facilities, storage units, hotels even, something much larger. And you own a tiny slice. Let's say, for example, you own a tiny slice of this medical facility with 100 different investors because you yourself couldn't afford a Starbucks in California, or you yourself couldn't afford to pay, $3 million for a gas station. So for investors who want a similar type of investment property without the management and without having to shell out that much money, a DST may be the route to go. But of course, everybody should do their own research. I'm not, advocating for any of them. These are just what I've seen a lot of my clients get into.
Does anyone else have any other questions or that you have related to 1031? while we have Wei Ming, our expert in 1031 exchanges here. Anything else you think you could share with us, Wei Ming, that we may have missed? I know we talked about a lot.
I think the only difference is in the Chinese portion that I was speaking about before, that there was a people asking about are there any additional extension? I don't know if I said that in English or Chinese, but I remember talking about it in 2018. I think it was dash 53 and notice 54, 53, something like that. I have to look it up on our website. But the notice was for disaster relief, and for something like, for example, the Paradise Fire that we all remember. Those investors got an extension of 120 days. As you know, the most recent notice by the IRS only extends the 1031 exchange to July 15th. And there's been a lot of confusion. A lot of people are requesting clarification from the IRS. A lot of companies are also requesting this clarification, asking, are investors who are doing exchanges getting that extension to July 15th and the 120 days from the previous notice, or is it just July 15th? And at the moment, we don't have an answer, but hopefully we'll get an answer and some clarification on that in the near future.
Any other questions, guys?
I have one from Steven. What if you first bought the property as owner occupied, lived there for 5 years, then rented for 5 years, then moved back in for 5 years? Can you still get the $250,000 or $500,000 gain tax free? Yes, you can, because in order for you to qualify for the exclusion, you have to live in the property for 2 out of the last 5 years. And the last 5 years, it's all been a primary residence for you. So yeah, you will qualify for that. Now, what I would do, what I would suggest is talk to your CPA and figure out how much capital gains you have. If your capital gain exceeds that $250,000 or $500,000 you're allowed to take, you may consider maybe moving out and renting your property out for 2 years again, or however number of years, but no more than 3. Because when you do that, when you sell the property, let's say you rent it out for 2 more years, you sell it, you're selling that property as a rental property, so you qualify for an exchange. But because you also qualify for a homeowner's exclusion, you take that $500,000 off the top first, and whatever's remaining, you can do a 1031 exchange. Especially useful if your gain is much higher or quite a bit more than the $500,000 you're allowed to take.
Anyone, any questions? If not, I would like to thank you, Wei Ming, for being here today. So we learned something today, and hopefully we can get our shelter in place as soon as possible. Okay. All right. Okay. So goodbye, everyone, and have a good day. Thank you.
Thank you.
Thank you, Wei
everybody.
Ming. I appreciate it.
Thank you.